Hello, everyone, and as always, welcome to our weekly market update provided by SC Securities. This is for the week ended 18th June 2021, and as always, we'll be taking you over the main highlights of the stock market this week, as well as some of the more macro news pertaining to the market, as well as looking at the secondary market and the commodities and global markets. And finally, Harin will take you over the technicals pertaining to the all share and our pick of the week. So to start off with the all share, we saw an early wobble this week, the ASPI though managed to recover and actually post a 1.76% growth this week, whilst the S&P actually rose by 1.03. The recovery and the rally towards the middle part and the end of the week was actually driven by index heavy counters performing well, in particular LOLC and EXPO. In terms of foreign activity or foreign buying or selling in the market, we actually saw a significant chunk of foreign activity occurring on the 17th of June, which was yesterday, Thursday, with 685 million coming in terms of foreign purchases. Now, a bulk of that came from Windforce, where we saw a huge foreign buying happening. And this was, as we've now learned, on the back of the Swedish-based foreign fund Tundra coming in for more shares. Now, Tundra, if you all recall, were the main foreign fund that actually invested during Windforce's much successful IPO in March. And now they've more than doubled their stake from 2.5% to 5.5%. So that's a very good acknowledgement of the company's growth strategies by a foreign fund. In terms of some of the macro news this week, the trade deficit widened on a year-on-year basis amidst robust imports, whilst the central bank actually allowed commercial banks to purchase international sovereign bonds. So to move into the first headline, the Central Bank of Sri Lanka actually lifted the ban on commercial banks and state-run National Savings Bank from purchasing international sovereign bonds, or ISBs, on the conditions that the newly borrowed foreign funds are utilized by the ISBs, and that half the money raised from abroad must be used to buy Sri Lankan development bonds, which is also a dollar-denominated security. This does actually bode well for the commercial banks operating within the country. Furthermore, we saw that the trade deficit widened in April 2021 to 889 million US dollars compared to 840 million US dollars in April 2020. Now, this represents a 5.83 year-over-year increase, and this is on the back of robust imports, which were driven up by sharp rises in the value for fuel imports, machinery and equipment, textiles, and chemical products. The central bank also announced on Thursday, 17th June, that the gross official reserve stood at 4.5 billion at the end of April, which will provide more import cover for around just over 3 months. The level of reserves do not account for the 3-year bilateral currency swap of 1.5 billion US dollars between the People's Bank of China and the Central Bank of Sri Lanka. Now, if we go over to the currency analysis as well as the secondary market, we see, and actually the main headline actually trickles down towards commodity news as well as our global news. We saw the pound and the euro fall this week on the back of the Federal Reserve signaling that they would actually increase the interest rate sooner than expected. So the Federal Reserve earlier this week indicated that initially, they had planned to implement an interest rate hike by the end of 2024. However, they've actually brought this forward by an year, and they say that they will most likely increase interest rates at the end of 2023. So 18 months down the line, and that would put an end to the more than accommodative policy structure that the Federal Reserve have undertaken thus far since the pandemic began. In terms of the secondary market, we saw the bond auction held yesterday actually fail to sell 60% of the treasury bills offered. So overall, there were 50 billion rupees worth of T-bills offered, but the auction failed to sell 60% of it. And only a small traction or investment was seen in the 12-month T-bills sold. But even then, the 12-month T-bills didn't actually sell their full quantum. Now, this does signal that there isn't enough appetite at this level of yields. And this is something that we maintained from the start, that this is a signal, as even previous T-bill auctions haven't been able to sell their full quantum, that the central bank will have to implement an upward policy rate revision down the line. So this is even more evidence that this upward policy rate revision should be coming in the near future. In terms of the commodity markets, we saw gold prices tumble again on the back of that headline news of the Fed's decision for a quicker rate hike. And we saw some of the base metals actually drop in prices due to China releasing its national stock. So gold prices, as mentioned, took a tumble this week on the back of the Federal Reserve signaling a faster and sooner policy rate hike. The recent surge in gold had actually led many people to believe that the Fed would begin reining in some of its very accommodative policies. However, the news that actually came out earlier this week was clearly more than anyone had expected, which is why you do see such a significant drop. Base metal prices also fell this week on the back of China finally releasing some of its national reserves in a bid to actually curb the rise experienced over the past couple of weeks on these counters. Despite oil marginally increasing, Brent futures were actually down nearly 2%, whilst WTI crude fell by 1.5% due to the strengthening of the dollar on the back of the rate hike announcement from the Fed. And as we move to the global market news, it's still very much centered around that Fed policy rate hike. Initially, there was some fallout globally, and understandably so. However, that fallout seems to have tempered somewhat, and stocks are left on near highs, whilst Asian markets actually did rebound with on the back of concerns of inflation and an overheating economy easing somewhat with this policy rate hike. We saw pan-European stocks index of shares actually ease by 0.2% to 458.5 points, just below Monday's record high of 460.51. Most investors in Europe and Asia are of the opinion that this rate hike, whilst being 18 months down the line, is a signal that the US economy is improving, and that indeed is good news for these markets. Stocks in London, however, did fall by 0.4% as lockdown restrictions were unexpectedly prolonged this week, which drove down British retail sales. And the US dollar is actually heading for its best week in 9 months as investors priced in a sooner than expected policy rate hike. So those are the main highlights from this week. I now will hand it over to Harin, who will take over and take you through the technicals pertaining to the ASPI and our pick of the week this week, EXPO. Over to you, Harin.
Thank you, Nuwan. So I'll start off with the index, where we were able to see that the index has actually managed to break the previous structure high at around 7,666. So the previous structure high was actually at a daily resistance level of 7,650, 7,700. Now that it has been broken, and also the index is trading above the daily support level 7,650, 7,700, the next resistance level would be 7,800, 7,850. However, the RSI has come to somewhat of overbought region, where the RSI is 70.91, and also looking at the EMA levels. EMA levels, of course, indicates a bullish momentum since the index is trading above the EMA levels, but the RSI is somewhat around in the overbought region, and also this area, the index could consolidate in between 7,850 and 7,650. If this is considered to be a false breakout, then the index could actually come down back to the daily support level 7,450, 7,500. But if it retains above the daily support level 7,650, 7,700, which is also the previous structure high level, so if it retains above that level, we'll be able to expect the index moving to the 7,800, 7,850 key region. So overall, looking at it from overall perspective, we can see that the index is actually still remains to be bullish, but there should be a certain of a correction in the market. So we'll see whether it will continue to decline. If it actually declines from this daily support level 7650, 7700, it could come down to 7450, 7500. Else, if it retains about 7650, 7700, we'll be able to expect the daily resistance of 7800, 7850. So moving ahead with the expo. So today morning I sent out a report also that the daily resistance is at 52.5, 53, and also the daily support is at 50, 51. The RSI is 67.53, and also we can see that how the price has actually got rejected from the daily resistance 52.5, 53, and it has made a closing of 51.6. So the closing was 51.6, and also which is above the daily support level 50, 50 being the 50, 51, 50 being the psychological area. So overall, we can see that how there was basically a bullish momentum. So looking at it, if we draw a trend here, we can see how there's bullish momentum in this stock expo. So there, since the price actually managed to test the daily resistance 52.5, 53, it has come down a bit for a correction. So I believe that from this daily support level, if it rejects from this daily support level 50, 51, it could again test 52.5, 53, and break in that key area, will be able to exploit the daily resistance 55, 56. If the price if the price, however, fails to sustain above this daily support level 50, above this daily support level 50, 51, it could potentially come down back to the daily again to the daily there's another daily support at 48, 48.5. So thank you. Over to you, Nuwan.
Thank you, Harin, as always. And as always, you can find this report. We will actually be sending it across to through our client mail. And thank you again for joining us. We really do appreciate it, and hope you all have a very pleasant weekend. Thank you.